This is the Scrap Metal and Commodities Recycling Report by BENLEE and Raleigh Goldsboro Recycling, June 26, 2017. Last week, commodity and economic reports were mixed. U.S. steel production rose slightly and is now a bit behind last year, but still ahead of where it was a few months ago. Oil fell $2 a barrel to $43.01 on oversupply issues, with prices hitting a 10-month low. The oil rig count rose for the 23rd week in a row, one of the longest stretches ever recorded. The rig count is now at 758, is well more than double what it was last year, but actually it still remains 53% off its high of a few years ago. Importantly, U.S. drillers continue to lower their operating costs, so we are seeing drilling rig count and job growth even though oil is in the low $40 a barrel area. Iron ore rose $1 metric ton to $57, showing some stabilization after months of falling. We have seen quite a decline in recent months on oversupply of material. Scrap ferrous prices remain steady. One major steel mill in the southeast remained open last Saturday to receive product. This is a sign that material is not in good supply. Overall, many believe we could see steady prices in the months to come. Hot dip galvanized steel remained lower at $865 a ton on little news as markets remain in a slow growth mode. Stainless steel for scrap remained steady at 29.5 cents after its recent fall on also no major market or news. Copper rose 6 cents to $2.62 a pound. At one point last Friday hit $2.65, a high we had not seen in a few weeks. Related, spreads have narrowed a bit in recent weeks as slow global growth continues. Prices are up less than a penny this morning to $262.6. The 5-year chart of copper shows that we remain actually quite in a small band in recent months since the major increase of late last year. Copper inventories continue to fall and remain ahead of last year, but this fall could help stabilize prices. Aluminum prices fell 2 cents to 84.1 cents as it continues to decline in recent weeks after hitting multi-year highs about a month ago. So actually, prices still remain relatively high. Aluminum inventories rose slightly, but in reality are near their about 9-year lows on this good demand, which should influence new production, which could then bring somewhat lower prices. The IHS Markit U.S. Manufacturing PMI Index fell to 52.1 in June from May's 52.7. While still growth, it's the lowest reading since September 2016 as output and new business growth slowed, offsetting stronger contributions from job creation and inventory growth. Sales of new U.S. single-family homes in May increased 2.9% to a seasonally adjusted 610,000, up from 593,000 in April. The good news is this is more than double the record low of 270,000 in February 2011, but it's still less than half the 1.4 million of 2005. Britain is one of the largest economies in the world. Their monthly industrial order balance, which deals with factory orders, had its fastest growth this month than any month since August 1988, almost 30 years ago, which supports stable commodity prices around the world. U.S. initial unemployment claims increased slightly to 241,000. We now have been below the key measure of 300,000 for an incredible 120 straight weeks, the longest stretch since 1970, 47 years ago. Wall Street Dow Jones Industrial Average hit a new high early in the week and ended near that high at 21,395, slightly ahead of last week. Corporate earnings growth remains strong, which does support stable commodity prices. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.